Shadow banking, mounting local government debt. The financial world has been nervously watching for signs reckless lending will shake China's financial system. While some Chinese companies have defaulted on bonds issued overseas, that doesn't happen domestically, with local governments preventing such defaults. When the normal rules don't apply and real numbers can be hard to come by, it can be a tough environment for rating agencies. Dagong rating agency attracted global attention with its decision to downgrade U.S. government debt, which it rates lower than China's. Earlier this year, it also issued rare downgrades of bonds by infrastructure companies backed by local governments. So with its local pedigree, is it better placed to act as an early warning system for China's economy? We met up with Chairman Guan Jianzhong and started by asking how serious the local government debt situation really is.
The actual size of local government debt and the ability to repay it is unknown, so it's hard to reach solid conclusions about it. As a ratings agency, of course, we're very interested in local government debt. But as we don't have access to all the relevant information, we can only guess. The last time the Audit Bureau released local government debt figures, they got a lot of attention because of fears of a crisis. The number then was 10.7 trillion yuan. According to our estimates, at that level repayment shouldn't be a problem because local government revenues have been growing steadily for the past 10 years and they have a lot of assets. But going forward, we need to build up a local government debt management system and to start applying ratings to local government debt.
So would Dagong be pushing forward with credit ratings for local government debt?
Currently, there's no direct sales channel for local government debt. In a few pilot regions, the central government, the finance ministry, issues debt on behalf of local governments. But at the latest third-party plenum, the decision was taken to make local governments finance their development through debt. So we need a more complete rating system that can measure debt risks. Our concern is that if we use current models to rate local government debt, the results will be disastrous. If local governments choose their own ratings agencies, they will have more leverage over them than normal companies. And in that case, the information could be unreliable.
When can we expect to see the first credit ratings for local government debt?
From my understanding, the government is preparing a system to apply ratings to local government debt very soon.
Earlier this year, Dagong downgraded credit ratings for 3 companies in China that are clearly backed by local governments. And the local governments are not likely to let those companies fail, so why would you downgrade their debt?
We're not just judging whether they will default on their debt. Looking at the company revenues and also local government fiscal revenues and profitability, overall their repayment ability has fallen, and we aren't expecting to see any change soon. So we downgraded the debt.
In China, it's rare to see a downgrade of a local bond. Are you facing a lot of pressure after you downgraded those 3 companies?
Some clients may not want to hire us, but what can we do? We need to stick to our principles.
China's never had a domestic bond that's defaulted. Do you think the government will allow defaults going forward?
If that happens, it would have a huge impact. China's local governments, as long as they are able to, will bail out companies. They won't allow bankruptcy, because that could also be disastrous for local governments. No one will lend them money.
Then in China, which sectors are most at risk of a default?
I think it's the sectors with overproduction that are the most at risk, because they are in cyclical industries where demand is bound to fall. So there's room for downgrades. For example, the steel industry. That's the most obvious.
Dagong has big ambitions to build up a global rating agency, and last year you got approval to start business in Milan rating European bonds. So how does your business here rating local debt impact the credibility on the international market when there are so few junk bonds or bonds with bad ratings in China?
Foreign investors need to understand the local credit rating situation. For us, if we can't meet clients' demands, we just don't rate them. Dagong's ratio of ratings upgrades has been the lowest in the industry, while other credit rating agencies continue to upgrade the ratings of their clients. Some companies, if you don't give them a good rating, will get it from another agency. But we're very strict, and we can confidently say that a credit rating from Dagong is reliable.